But, I think we've just built some edge, I would say, in good intel. And we have a database probably now 400 or 500 deals where, we're very relative value focused. So, we just look at pricing and demographics and, the strength of the property in one, part of Houston versus another. And we just try to, say, hey, I like this trade or I don't like that. And here's why.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to another wonderful, exciting episode of Weiss Advice. I'm your host, as always, Yona Weiss. I'm really happy to be joined today by Ryan Christopher Nunes, all the way from the beautiful state of Texas. What's going on, Ryan?
Yona, thank you so much for having me. Appreciate it.
Pleasure's all mine. I love the fact that you got the, sporting the Wall Street, in the background. But it's really not about Wall Street, right? We're trying to get out of Wall Street and moving into Main Street with commercial real estate and specifically multifamily property. So I'd love to jump into that. But to give our listeners a little bit of context, Ryan is not only the founder of Life Changing Capital, a multifamily investment company based in Texas. He's the host of the Multifamily Rockstars podcast and has had a tremendous amount of, experience. I'd love to just get into that in oil and gas and so many different industries. So Ryan, let's just jump into it. What's my question for you? First question is, how are you doing today?
I'm doing great. I'm doing really well. It's been exciting. We have a property that we bought last year that's on the market now, and call to offers are next week. So we've gotten some offers on that. So that's pretty exciting. And properties are performing well, and kids are in school and looking forward to the holidays. Just a fun time of year around Houston. So with Thanksgiving and Christmas around the corner.
Yeah, definitely. First of all, that's crazy. Let me ask you a question. The deal you said you bought last year and now you're selling, was it when you bought it last year? Did you ever even consider that you'd be selling it within less than 2 years?
No, we bought that deal in the depths of the pandemic. So, if during COVID, people just, were like, I'm not touching apartments, who knows? People aren't going to pay rent. At that time, there was no rental assistance or anything. And what was also challenging was the deal. We actually had toured it November of 2019, bid on it. It went under contract with somebody else, and, fast forward, 5 or 6 months. And, I happened to be in Dallas and, just was like, whatever happened to that deal? Did you guys close? He goes, you know what? The broker was like, it just fell out of contract today. And so later that night, we put pen to paper again, refreshed the models and bid on it. And he awarded it to us. And he said, these guys are going to close. Oddly enough, it fell out of contract by a guy that had written a book on real estate closing. So it's kind of ironic. But, there was a lot of, cloudiness in the multifamily space at that time. A lot of investors were like, I just don't want to invest in anything. And, these were after, huge sell-offs in, commodity prices and stock markets. And, people were just, very concerned and kind of sheltering up. And so, there's two things that people will tell about San Antonio. One, talking with investors, people are like, the places where they either, underperformed or lost money was San Antonio and Oklahoma. This is prior to the pandemic. And then, two, someone, I was at a conference last month and someone said, San Antonio is where the promote goes to die. And I thought that was pretty funny. And so here we are buying our first deal as lead sponsors in San Antonio. And, we're very conservative in how we underwrote it. We felt that there was a lot of meat on the bone, and sometimes, there's kind of theory and then there's practice when you kind of, take ownership day one and start digging into things. But when the rubber hits the road, but it was owned by someone out of state in California, deals 88 units in San Antonio. And he had owned it for 21 years and just, ran things really fat. And, went to visit the property once a year. So just, kept everything in classic car condition. So we are the third owners of the property. Wow. It's a late 1960s vintage. So it just hasn't been turned and hasn't been upgraded. So he kept everything looking like how it looked on, when he bought it. And so, took great pride in that. And so we came in and painted the cabinets and put in backsplashes and new countertops and, renovated the exterior and just made it much more appealing, new signage, new paint colors, renovated the whole leasing office. And, the rents for a part of the property were around $807 when we took over, and we took those to $1,100.
Wow.
And so, when we thought about, hey, we're actually hitting year 4 NOI 1 year into ownership, we've done everything that we've wanted to do at the property. And it's like, if we keep doing more, then you get into this, high class problem of, okay, you're increasing NOI but you're giving less to the next buyer. And,
right.
We thought in that, 88 unit property, we wanted to be, we were cognizant that we wanted to have a lot of upside for the next group and just, give them something to do.
Gotcha.
And, be excited about. So, we have a call to offers next week. It's November 16th on that deal. So we're excited about that. And, it was one of those deals where I was like, hey, I'm ready to write the full equity check if nobody else wants to invest. Because at that time it was just so uncertain. And we came in, really not knowing if, who was going to invest, how many people would invest. And, fortunately we had a number of people that came out and supported us. And I think they saw that, at that time we had looked at, 200 or so deals and, just won that one. And so, they were like, wow, you guys have spent a lot of time, scrubbing deals and
right.
digging hard. And, if this is the one, then, it's got to be good. So, we had people from brokers to mentors and coaches in the multifamily space to physicians and lawyers and doctors, all that. So it's just been a great run. We ended up cutting people back in terms of, allocations and went oversubscribed in just a few hours. So it'll be a great story for investors.
That already is a great story. I mean, in the works. We'll see what happens once it closes, which will actually probably happen after this episode airs because we have a few weeks out. But that's really exciting. I mean, there's a whole story. There are a ton to unpack. So I want to just kind of, maybe if we can, just dig into that a little bit because you were able to find this deal, and the irony of the person who fell out of contract was someone that wasn't able to close, even though we wrote a book on real estate closings. That's funny, but it all comes together. The fact that you had met that broker that day, it just goes to show you, and we've talked about this a lot on the show, keeping up those relationships, keeping up, rewarding the activities that are going to produce income, even though you may not be getting anything. Like you say, looking at 200 deals, talking to how many countless brokers. And it's incredible that you would be thinking that you'd be closing. You probably thought a few years ago, we'll probably close, 2, 3, 4 deals, and then you can't find it or it doesn't work out. But when you do find the good one, that's when everyone's going to come show up. And it just adds to your credibility as a great sponsor. Where do you think, that came from? Meaning, it's your background in Wall Street, background in the oil and gas that gave you that kind of insight into finding, the best deals and operating them?
Yeah, no, for sure. I think it's a few things. I mean, I don't think anyone really taught us. I mean, frankly, a year before buying that deal, I didn't even know what a cap rate was. So, right. And from just leveraging had run successful businesses on Wall Street, I generated over $200 million in sales revenue, just dealing with clients and just, kind of being very transparent and very upfront in a sales role. And my business partner is, his background is M&A banking and private equity, which I kind of say is kind of the Navy SEALs of Wall Street. Right. Very good at modeling. And I think just the two of us, me being very market driven, having been around markets and folks and people, my whole career, and marrying that with, his underwriting skills and so forth. And just, trying to take a very institutional, transparent, hands-on approach to the space. I think we just tried to see trends and we tried to understand demographics and asset quality. And, I think there was a quantitative aspect on this deal where we felt like rents were just low. I mean, they were just renewing people at flat, weren't pushing things hard. I mean, he bought it so cheap. So he was just like, it was a cash cow for him. And then from a qualitative aspect, my experience of I enjoy architecture and I built my house and, really enjoyed that process. So I can understand, what good quality construction is and, what's behind the walls and is it good or not? And, this asset, I just remember, the first time I saw it, I remember texting my partner. I was like, we got to buy this. I just really liked it. It's 80% is one story. So it's very, very unique and low density product. And, you just wouldn't build something like that again. And I think that, was very appealing to us. And I think, kind of the marriage of all those, dealing with investors, being very transparent with them, digging really hard on, the asset and scrubbing the T12 and rent and roll for any anomalies or anything that looked odd. And then just having a business sense to do more with less and, running the business. I mean, we cut expenses about 38% in the first, first 6 months on that deal. So, and we got, an improved, income by like 12 or 13%. So, the combination of that is an NOI increase of 150 or so percent. And, a function of that was like, how do we just run things better, cheaper, faster? And so that was, a lot of minutia, from they were paying for cents, like $100 a month for cents in the office, and they were paying, for renting a copying machine. And we just bought a new copying machine, and, we bought a cent, one-time expense that was, pretty inexpensive. And, that level of minutia detail all the way to, the paint on the exterior and redesigning the office. We did all of that in-house, all to just save money, right, for our investors. And, we really wanted them to have a good experience, being on time with our K1s, being on time with our monthly reports, monthly distributions. And so we just, we wanted to kind of make a mark and for people to say, wow, you guys, the monthly reports are super clear. I myself have passively invested in 20 deals. And so I get a lot of monthly reports and, interact with a lot of sponsors. And, I want ours to be, head and shoulders above the rest, that people in a minute can look at the report and say thumbs up, thumbs down on their investment. And, through charts, through trends and so forth. And not be like a ton of wordiness to cloud, the fact of underperformance. So, for me, it was just important to be very transparent. And, I'll say that, we did a deal a month after that one, and we had, investors in our first deal invest in the second one. And then we did a deal about 5 or 6 months after that. So kind of 3 in a fairly short period of time. And, all of those investors really, came into all 3 of those years. A number of those investors came into all 3, and that meant a lot to us. Just in terms of, I think that speaks to when they've had an experience and like, yeah, this has been great, and we appreciate the transparency. And so, that's important. I think at the end of the day, I hope everything goes right with our assets. It's hard to promise that, but I can, look people in the eye and say, we're going to do everything possible, and be very performance focused. But, above all that, we're going to be transparent with, our communications with you.
Sure. Absolutely. I mean, it does speak to that. I think one of the things that you mentioned there in that you had personally invested in 20 different deals and have seen a lot of that back and forth from sponsors, a lot of those distributions and different things. And someone who has that kind of experience, you are going to cater to your investors. And so it's going to be a much more investor friendly, investor centric, type of deal. And I think that shows, because you're the person that can back that up, right? What's a good user experience, what's a good customer experience. Absolutely. In terms of that. And I think anyone who has had experience with getting, passive investments, if you've done more than one, right, then you can, with meeting 2 different sponsors, then you can already see like the differences. And you can know, okay, I like this, or this is better, this needs work, or this is great, or this is, like you said, too many words, just clouding, just share, be transparent, be upfront. Those are the things that investors want. And a lot of investors are not really interested in getting into the gory details of everything. They like to hear a story, to put it in a story in the version of, this is what we did. Like you said, we took this property, we upgraded this, but the gory details, not really many people are interested in. So I think when you can experience that as someone like yourself, you'll go very far in terms of being a good sponsor that people will keep coming back to. As we've seen, I mean, like you said, you've had that experience already.
Yeah, that's really important to us. I mean, we want repeat investors, and we're in it for the long term. So it's like building a very strong foundation so that we can scale appropriately, and we just try to have the best reputation that's possible for us.
100%. Have you looked outside of Texas? I mean, because obviously you're local and it's important to have a local presence, but as time goes on and you guys keep growing, is there talk about expanding, or Texas is there's a tremendous amount of opportunities just in Texas alone?
Yeah, I mean, I think I live in Houston, so the Texas Triangle. I'm a general partner in a deal in Dallas, 2 deals in Houston, and 1 deal in San Antonio. So we've kind of completed the Texas Triangle, and then I also am a general partner deal in Athens, Georgia, and was kind of my entree into multifamily. But I think we've just built some edge, I would say, in good intel, and we have a database probably now 400 or 500 deals where we're very relative value focused. So, we just look at pricing and demographics and, the strength of the property in one, part of Houston versus another. And we just try to, say, hey, I like this trade or I don't like that. And here's why. So I think that's really our edge and our approach. And I think when we've looked at even outside of the Texas Triangle into the kind of tertiary Texas markets, we just felt like the value wasn't there. And, frankly, I don't think people, cap rate is a measure of risk. And I think the cap rates were just right on top of core Texas Triangle markets. And for us, it was like, I would rather not take that tertiary market risk and stay focused on core Texas Triangle. And similarly, I mean, there's a lot of other great markets. For us, I feel, hands-on asset management is just really key. I mean, we are which is unique or different. And we are very in tune with the staff. I mean, I see all the Google reviews. I get them first. I'm in WhatsApp with staff at all our properties. So we have direct lines of communication. I go to the properties often. We're actually planning a dinner with our 2 properties in Houston to take them out and celebrate Christmas and all of the hard work that they've put in over this past 6 months to a year at both properties. So to me, that's really important that I know them on a first name basis, and they feel very open to come to me and say, hey, we need this, we need that. This is a problem. We want to work as a team. And so, that's part of our strategy and business plan. And I think it's a little bit harder to replicate that, if we go outside, unless we have, right, another partner that, we feel we've been equally yoked and can do that with.
Understood. Yeah. I mean, obviously, if you can maximize what you're doing in the markets that you understand, like you said, even outside tertiary markets in Texas itself, even though some of them may have, great potential and people are moving to Texas by the droves and are, all these cities are expanding. And so even within that triangle, there's a lot of these kind of markets that are popping up that are becoming much bigger and much more kind of centers of growth outside of the triangle. So that's something to keep an eye on, but obviously keep doing what you're doing. I want to ask you about the asset management you're talking about, the property manager dealing with your staff at these properties. I mean, are you doing, obviously you're giving back to them, taking them out, showing that communication is awesome. That's key. Any employee, you need to have that type of line of communication for it to be successful and for them to feel like they have, a vested interest in wanting to, right, make sure that you and your investors are getting the best returns. They have to feel like they're getting something out of it too, in a way, right? I mean, in the end of the day, it's a job, right? So you want to make sure that they're happy in doing it. Are you giving, do you anything besides that for the actual, residents in terms of like community projects? Or I'm always curious to see, because I've spoken to a lot of operators and there's so many different unique kind of ideas out there. And there are many operators, many real estate investors that listen to this podcast. So I always like to, give a little advice or a little tips on different kind of out of the box, if you will, or maybe not your standard, summer barbecue. Maybe that's cool too, but like, sure, anything else.
Yeah, no, a few things. I mean, one, thanks to you, it really encouraged me or challenged me when you did the 10-day LinkedIn challenge. So I wrote a number of things about asset management and, how to, I wrote one article about being a player coach because you kind of asked about the staff interaction. So, and that was just really borrowed from my days on Wall Street where I led a team and I said, instead of me just kind of delegating and demanding, it was like, hey, let me just show you how I would do it first. And so that you could see my hands are getting dirty. I'm in the trenches with you and lead by example. And then, pass that on to you to do. And so, have an article about just some real stories where, this on-site manager wasn't using Facebook and, just really wasn't marketing the property well. and was just relying on drive-by traffic because there's some 40,000 cars that drive by a day. And I was like, well, what if we couple that with Facebook marketing that's free? And so I got a few leases through that. And it was just open up a new world, a paradigm shift for her. It's like, oh, wow, we can do that. And I can get leases that way as well. And then on the kind of, you mentioned resident events. One thing that we've done at all our properties is we partner with local churches and nonprofits. And so, in part of kind of the life-changing capitals, the company I created and the vision that I had is one, kind of play on words, life-changing. On Wall Street, we talk about, what's a life-changing amount of money where you just, walk off the desk and never come back. And then two, life-changing just in terms of really, I feel like whether a great responsibility, but a potential to impact a lot of people, because at the end of the day, we're the owners of the property and we kind of set the tone of, how we want the staff to treat the residents and the events we want to have. And so by partnering with different churches and nonprofits, they have a vision to impact lives and we support that. And so, at our properties, we've done, everything from a fall festival to a kids camp for a week to bouncy houses and mechanical bull rides to, barbecue grill outs. And it just, we encourage that. I mean, we want this to build community and we want to have, high renewal rates. The case in point is the property that I mentioned in San Antonio, the first one we bought. People have lived there now 5 years on average, which is unheard of. Of the 400 deals we've looked at, I think we've only seen that like once or twice. That
that's pretty unique
of residency. And then secondly, the renewal rates have been 82%, which is crazy. Industry average, in the pandemic, which was more sticky, is 57. So, I think that just shows that people have really enjoyed, the tone that we've set at the property and the events that we've held for residents and the things that we're trying to do. And, we take really great pride in our Google reviews. All our properties kind of around 4, which for B and C class properties, it's pretty high. It's hard to please everyone, but it's something that we take, personally and really look into. It's important to us that residents, get the value of what they pay for. And, case in point is, we have a 1979 property in Houston in the boiler. We have 3 boilers. 1 boiler went out and we had budgeted CapEx for it and we were able to repair it instead of replace. We had budgeted $30,000 to replace 1 or 2. And this one we were able to repair for 5 or 6. And, but it was out for a few days. And, I personally had my hot water heater out for 10 days, wanted to experience some pain while we, converted to tankless. But, and we just decided, let's just buy pizza for everyone in those 3 buildings that's been affected. And, at least that's some small thank you for, your patience. And, we care and we notice. We know this isn't easy or fun, but we're working on it. And here, have a pizza on us. So we try to just be thoughtful, and I think a lot of this is just people want to know how much you care. And just from my time managing people, it's like when they know you care, they're there to support you, and they're there to renew, or they're there to absorb rent increases and all the things that go along with managing a property.
Wow, yeah, that's amazing. Those are great examples. I mean, I hope everyone listening to this is like taking notes, because there's just like so many little pieces in there that you can apply. And I think the foundation of it all really just comes back to, like you said there at the end, you have to care, and people, can see people, and they see, there's a lot out there of kind of slumlords, or at least, media pictures of that, but they exist. I mean, they are. If you go to any market, you'll find some of those properties, some of those landlords, and you'll see that from the Google reviews. Like you said, if you go and look there, obviously people who are leaving those reviews are, most of the time, if they're really bad reviews, they're upset, right? And they just want to vent and they want to take it out, and rightfully so, but some of those things can be, it really depends on the consistency, right? But when you see such high reviews and you see such high caliber of renewal rates, I mean, that's crazy. 5-year average tenancy, like that's crazy. Like not just Texas. I mean, most markets, it's very, very difficult to find that. That means that people really enjoy living there. They've established a community among themselves, and they feel like, here, this is our home. This is a place we want to. These are our friends, our family, and let's keep it going. So the more you can do as an owner, as an operator, to just increase that feeling and provide for them, that will just increase your revenue. Like you mentioned to me that you have a meetup, you're having Rob Martinez speak. When he was on our podcast, one of the things that he said that I recall, one of the things that stood out, and then we can go back and listen to that episode, but he said there, you make the money on the renewals.
Absolutely, yeah. He's a firm believer in that.
Yeah, he's a big advocate of that statement. But the point is that you have to make that community feeling so that people will keep coming back. That's awesome.
Absolutely. And, I think just to add on that, as I think about those residents, I mean, we really wanted to do something special for the residents that have lived there longer than 5 years. So my kids during spring break, they love the property. So San Antonio is about 2-3 hours from Houston. But for spring break, they wanted to go there. And so we bought some Martinelli's apple cider and some homemade cards. My daughter enjoys making cards. And, we knocked on the people's doors that, had lived there longer than 5 years and just said, thank you for being here, and took some pictures with them. And it's just doing that, it didn't cost much, but it was just that we showed the time that we care. And, that's really the hands-on approach that we have at the properties. And, frankly, all of them, we're charging premium pricing. I mean, we're leading the immediate submarket in terms of rents, but we're also trying to deliver a premium, quality product. So just the upgrades are, we like to think that they're the best in the submarket, and the quality of service, the attention, and, the responsiveness to, issues and work orders. And, it's something that we go through every week to make sure that we're on top of things and nothing's getting out of hand. And, we're just delivering a high quality product for the price that people are paying.
Awesome. Yeah. You got to keep it up, keep it moving, keep doing those things. And to turn it around in 18 months or however long it is, that 16 months or so from when you bought it until you're going to be disposing of that property, it's just incredible. I mean, that really does just speak to the volume of what can be done. And maybe it speaks to the, what the market is right now, but I'm sure it obviously has a lot to do with how you've capitalized on that opportunity in this property. I do want to switch now to the final 4. This is 4 questions I ask all of my guests. And for you, Ryan, first question is going to be, what's the worst job that you ever had?
So I was working, I don't know if they had one in Houston and they closed it down, but when I grew up in New Jersey, and so I was working at an Einstein bagel, so a chain bagel place. And I remember it was in the summer, and I remember, this is a lesson on how to not treat people, but I remember, cutting bagels and preparing a sandwich, and it was a busy, lunchtime, and I was hustling. I'm kind of a guy that hustles. And the guy was just like, he wasn't helping, like, I guess my boss at that time, and he was just barking orders. And I was just like, I'm really hustling. And he was very, rude, condescending. And, it was the first time where I was like, just had, the thick skin got pierced, and I was just like, you know what, I'm out. and I walked off the job. So, funny story. I tend to stick things through, but that was one time where I was like, enough is enough, and I can do some things that are better than this. So that was one. That was the worst job.
For sure. And now you come back to buy the Einstein bagels, right? That's the story. How to end. No, that's crazy. Having a manager like that nobody enjoys that. But most people, it's interesting. Most people, I'd say the majority of people that answer this question on the podcast, it's usually one of the early jobs, right? A summer job or a job in high school or college, where early on you learn what you don't like, and you kind of move and see how to be more successful in something, using your time and energies in something better. Second question, what's a book you've read that's given you a paradigm shift?
Yeah. I honestly think there's a book in the Bible called Philippians. And for me, that has been really life-changing. I remember in college, it's just like a piece, I went to Georgetown, and for me, I felt like, in a way I didn't really belong because, my grades in high school weren't that great, but I had to prove myself in college. And, I did. I ended up graduating magna cum laude. But I remember before my tests, I would read, it's a 4-chapter book, and I would just read that before every exam. And I think it just gave me a sense of peace and just saying like, the world is bigger than me and bigger than this test, and just put things in perspective. So I would really, anytime that I go through like, oh, this is a tough situation, that's kind of what I turn to. So I would say like that would be number one.
Very cool. That's the first time we've had that mentioned on the show. So definitely appreciate new reading material out there, which maybe some people have read that before, but you never know. What's a skill or talent that you would like to learn?
I'm working on being more flexible, because I think, if I can be more flexible, it'll just, eat better, just like chain reaction of positive things, and we'll have more energy and so forth. So I'm going through a 30-day, deep stretching yoga class right now. So I'm in day 4. So hopefully by the time this episode airs, I'll be a different man. That's one of the skills that I've always like been in awe of, people that are flexible. So that's a skill. That's something you can learn, I guess. Yeah. I think the body can do amazing things. So all things are possible.
All things are possible. It's true. It's just about, training and conditioning, and a lot of that. Some of it may have to do more with, structure and things like that. But no, I mean, yeah, you'll probably be stretched out. We'll see. We'll get back to you. We'll have a follow-up and see how, if you're like, what was his name? Gumbo? What's the guy? Fourth and final question, Ryan. What does success mean to you?
It's really, for me, it's always been like, whether whether a certain grade or a promotion, or a day at work, it's always been like, have I done my absolute best? Have I really left nothing on the table in terms of, using God-given talents and abilities? And if I felt like, I really didn't give it my best, then it's just not a good feeling. So, I think it's really, have I used my time, talents, energy, in the best way possible? And, right. To me, that's success. And, hopefully along the way, there's, some positive relationships, strong relationships with my families and so forth. But just, being intentional about that time. I think to me, it's less about monetary success. I think, fortunately I've had that given, just the time on Wall Street and the dedication to excellence, but success, I think is more than just the monetary benefits.
That's awesome. It is truly. And the more people that come to realize that, the better place this world will be, too many people are just chasing after money and monetary success, what they call it. Unfortunately, it doesn't, it's not, great for this country or for anyone for that matter. So I'm glad you found a higher purpose and living life to its fullest. I wish you much continued success. Where can our listeners find you or reach out to you?
Yeah, I appreciate it, Jan. Thanks for having me on. So feel free to go to lifechangingcapital.com. You can book a time to talk, have some articles, a number of the 10-day LinkedIn challenge is all up there. So some videos on our properties and so forth, but lifechangingcapital.com.
Very cool. Very cool. And I do want to just mention one more thing over here. You mentioned that you have a monthly meetup in Houston, a local in-person meetup. The next one, like you said, Robert Martinez, will be actually probably before this will air. But where can people find out about that if they want to meet you in person and come to one of your monthly meetups? Yeah, for sure. So if you go to meetup.com and look for the Houston multifamily meetup, you should find us there. We have over 250 or so people that have registered, and so we're looking forward to just building a community. It's during lunch near the Galleria, which is kind of the hard part of Houston. So just really trying to attract a professional crowd, right, and to learn, to network, and to build a community around multifamily. Very cool. Awesome. Well, again, wish you much continued success. And to all our listeners, thanks again for joining. And remember, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn, send me a DM, connection request, Yona Weiss, and I'd love to hear from you.